presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate your growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for tuning in. Just after 3 p.m. Eastern Time, we got less than an hour left to go in the trading day, and you got a little bit of divergence out there. Growth stocks pulling back. You get the Dow pushing higher. Russell, though, leading the way right out of the gate this morning. The Russell up a full percentage point. That's what we'll kick off the program with. You get the Russell all the way up to 26.24 this morning. That's a run of 44 points from where we were this morning. You came into the market down about, well, we were in the red, and we are 35 points above there. So you were about 10 points in the red on the open. You drive all the way higher to 26.24. We've backed off a bit. Dow pushing higher as well. All-time highs yesterday in the Dow, just shy of 50,000, 49,860, and right now, 49,456. You jump over to growth stocks, as I mentioned. A little divergence. You get a sell-off on the open. NASDAQ, we almost hit 26,000. Now 26,000, you're about 400 points away from those highs made in October on the NASDAQ. And then you jump over to the S&Ps. We reach a high yesterday as well, 7,006. We've backed off a bit. You're off by 8 points in S&Ps. We jump over to yields. A little bit of lower price, higher yield. The 10-year off almost 11 ticks. We got a little economic data this morning. We'll go over that, but you got the 10-year approaching 4.18. That's giving the dollar a bit of a bid to 98.92 right now. And even with the strong dollar, you got metals holding up well. Gold, actually positive on the session. I say actually positive. It was lower. Silver's off 2.25% right now. Gold's in the green. You jump over to platinum, slightly in the red, but as I mentioned at the top of the hour update there, you got platinum $100 off the lows right now. You were as low overnight as 21.65, and you're exactly $100 off that low, and you're kind of right where we were on the acceleration on Wednesday. There's your Thursday action. Yeah, Wednesday evening kind of, right? That volatility last night. The lows of last night, the highs of today on platinum. All right, we jump over the VIX. 1557 with the VIX in positive territory. The market slightly in the red. But we're a far cry from 1338. This is not Christmas Eve. Okay, the doldrums of Christmas Eve, the day after, things have been rising since then. Not a coincidence that volatility hit its low on Christmas Eve. You get that doldrums of the holidays in between Christmas Eve, New Year's Eve. You're coming back. VIX just keeps rising since then. And remember, the S&P's hit an all-time high yesterday. Look at the VIX. Okay, we'll be talking to our man Tim Ward coming up at 3:30. Always a good conversation. I'm sure we'll talk about some of the VIX, but you get the VIX right now up by 19 pennies. All right, let's take a look at some of the defense stocks. Quite the roller coaster, man. Look at this, all right? Yesterday, you get the news that no more dividends, no more buybacks, executive pay, and I'm going to jump around. This is Northrop Grumman, NOC. This company, I think $120 billion company. What are we talking about here? $85 billion company, Northrop Grumman. You're almost $50 off of where we were trading at this morning. Looks like the market's saying this defense budget, not so sure that one's going to happen. You give it all back just like that. But guess what? A lot easier to control, okay, the terms of some of that money that is spent with defense contractors in the current sense versus the entire defense budget. And so the market's made a quick decision here. You come into that news at 612 yesterday, and you got Northrop Grumman, a solid $20 below that level, as in the news about no more buybacks, no more dividends, executive pay capped. That's what's happening today. That's what the market's paying attention to today. You jump over to RTX. Now, you give back all of the gains. think about it. We got the news last night that the Department of Defense, Trump wants to raise their spending by like 50%, by like $500 billion in a year. RTX is barely positive. So the market's talking right now, man. And yeah, I would pay attention. Pretty remarkable. The two pullbacks right there. And this one, okay, RTX, you're talking about 250 billion, I think? 250 billion market cap, man. This company's got 1.3 billion shares outstanding, and you just traded from 197 to 185, what, 12 bucks? Yeah, $15 billion market cap pullback intraday for these defense stocks. You talk about some volatility, man. All right, let's check out the big dogs. You got NVIDIA pulling back today. Look at this sell-off, man. Whew, we got some action in this market. Let's check out the volume. NVIDIA just trading lower almost all day. Right now, you're at about 650 million shares traded for the week. That's going to be a bigger week, of course, than where we were. It's only Thursday, so you got the rest of today and you got tomorrow. We take a look at the daily. Yeah, we'll see. I don't know if we're going to break these numbers. Right now, we're at about 135 million. You're coming into 176. You're breaking below 183. And you're coming into this acceleration on 174. So we'll see how the volume comes in. 135 million for NVIDIA so far. Apple in the red as well. Now, we've been talking about Apple. Listen, we get a pullback near the bottom channel, man. That's going to be quite a setup. And you don't just... let's just say, right, we've been following Apple, talked about them during the holidays, got a new phone, got a new tablet, got a new watch, right? Got all three. And I said, man, now, a lot of that holiday season was baked in when you had Apple trade from about $200 up to $290 over the second half of the year. But look at this channel. Okay, now this is a weekly. No, it's a monthly, excuse me. That's a monthly. Let's put it on a 5-year weekly, which takes you back almost to the beginning of that channel line. And yeah, we got some selling on Apple. Now you're breaking below the selling from December 15th, where you're really, now that was options expiration, if you recall. December 19th, we got a lot of earnings on a lot of equities across the board. That's that earnings. You pull up Apple. Okay, there it is, December 19th. Huge portion of that volume on that day when you traded higher. But on a weekly basis, you had lower price and you did it with volume. Now you're breaking below there, but I'm watching the bottom part of this channel. And hey, we just traded $30 off the highs from where we were in December. You're only talking about another $37 from where we are. You're pushing 220, and maybe there's your buy. But boy, the nice thing about trades like that, right? We'll watch the volume, of course. Okay, you got some nice strength here from August. That's really the last time you had the most strength, right? You kept breaking higher and a little bit less volume. The week of September 15th, a little bit less volume, October 27th. You peak out December 1st, and now we have some selling. So ideally, okay, an ideal setup, maybe coming back, testing this bar right here. You come back, test the bottom channel line, and you'd want 200 to hold because that was the floor all this year. That was the ceiling back here, right? An area of resistance on the way up. In terms of the end of 2023, the beginning of 24, you blow through that area with volume in June, and then that's the area that we found a bid right around in April. It goes back further than that. Because you're almost talking about going back to where we were. 182 brings you back to 2021. But Apple trading lower today. We're coming back, folks. We'll take a look at Tesla, some other equities. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're going to talk a little crude. This one's a good one from the Journal. So this one is talking about the type of crude Venezuela has, and if you're not familiar, so they got the heavy crude is what they have. Okay? And refineries from Puget Sound to the Texas coast were designed decades ago to run the types of heavier, more sour grades of crude that the U.S. imports from countries including Canada, Mexico, and Venezuela. Much of the oil that's pumped in the U.S. is lighter, sweeter crude. Okay? And you look at U.S. crude oil production, man. You know, Venezuela is giving us tens of millions of barrels of oil a day, and that's how much we produce every single day, which is remarkable, the amount of production we have at this point. Our refineries on the Gulf Coast are the best in the world in terms of refining this heavy crude, and there's been a shortage of heavy crude around the world, so I think there'll be tremendous demand and interest from private industry if given the space to do it. We salute you, Marco Rubio. No, this is not CBS News. I had to. It's crazy. But hey, I can't help myself sometimes with everything going on. About 70% of U.S. refining capacity runs most efficiently with heavier crude. 70%. Those plants are concentrated on the Gulf Coast. 9 of the country's 10 largest refineries are located. And yeah, Venezuela's oil output has plunged, and what little it produces has mostly been redirected to other countries such as Cuba and China. And there's your graph, man. Right? Down to nothing at the end 2019, 2020. A little bit of an uptick coming into just now. And these are the imports. Okay, Canada, Mexico, and Venezuela at nothing there. So our refineries may be the biggest winners in this, okay? And there's the article from Bloomberg to go full circle. And yeah, you're talking about refiners, and those are the ones, you better believe it. You jump over to Valero, okay? One of the largest refiners have surged 11%. Marathon and Phillips 66, impressive gains. And yeah, that's the same chart we just looked at in terms of imports of Venezuelan crude actually dropping to a zero for 2020, 21, and 22. And then you start sneaking higher a little bit in 23 and 24. And state-run in Venezuela has previously partnered with some of those companies. So that one's going to take a while to play out. Not sure who's exactly running it. Nobody's really sure. You know, they asked Vance, "What's your role?" He says, "Whatever the president tells me to do." It's like, okay, we get it. What is that? We don't know yet. We don't know how it's happening. Nonetheless, the U.S. is getting a little bit of a crude stockpile of 1 to 2 days. They're going to sell that on the market. Probably be a couple $1 billion. And we'll see where we go from there. But crude's catching a bid today, man. Okay, this is quite a break. We've been in a downtrend channel, and if you're going to break out of that channel, this is how you want to do it, man. We got wide price spread, you got volume, and crude's up 4.2% right now. All right, let's jump around to some of the other stories this morning. I said we got a lot of data. U.S. productivity accelerates to the fastest pace in 2 years. Now, what this statistic is productivity or non-farm employee output per an hour, okay, soared at almost a 5% rate, above the revised 4.1% advance in the second quarter. Now, here's the kicker, though, okay? If you have GDP growth and you don't have employment growth, productivity goes through the roof. Now, we have productivity gains. Technology is always going to improve productivity, right? From any piece of technology is going to improve productivity. I shouldn't say it, but generally, right? Everything is, you're always advancing. You're always being more productive, not less. But the other side of that is this statistics can also rise at a time when there are layoffs. A lot of times other employees are asked to pick up the slack, right? And many times you won't get an exact drop, as in if a company like Amazon has 1 million employees, right? They're just not losing a certain amount of their earnings and growth and whatever every time they lay off X amount of employees. Yes, they're all interrelated. Yes, this statistic is made up of, right, the output per an hour, period. But what'll happen is that, of course, in times like that, you're not growing. You're not there. When the belt gets tightened, productivity can go higher than you thought. So not always the best statistics. So keep your eye on that. We have job gains are the problem right now, and productivity is not the problem right now. If anything, the problem is that we have too much productivity. You have companies like Amazon, Walmart, right, going to be able to grow right now rapidly without expanding the workforce as they focus on cutting back and expanding on AI and technology. Now, you also got initial unemployment claims, 208,000 in the week ended January 3rd. Continuing claims, 1.9 million, and that was for the week ended December 27th. So you're talking about a lot of volatility for continuing claims, as that's Christmas week. And you have still a lot of volatility in initial, as that's New Year's week as well. But yeah, productivity in focus. And this was a good article out here as well. Okay, I'll share this one in the Tiger's Den because, man, it's interesting to see how this accelerates. And this just talked about the tariffs. So you get the kickoff of the Supreme Court term tomorrow, and they could come back with their ruling on tariffs anytime. And if the president loses and they rule them unconstitutional, there are other avenues that he can employ. That's one of the points that they made during oral arguments. And if you look at this chart, though, man, okay, oral arguments right around the beginning of November. And since then, there's almost 1,000. And these are U.S. importers, okay, that are filing lawsuits to get those tariffs back. Nobody was speaking up when they weren't sure what was going to happen, because why take the risk when you're going to face blowback for your speech from the president? They wait until they get some clarity. They watch the oral arguments. The skepticism is there. And you have people lining up. And you're talking about 301,000 have paid that. Now, you have 1,000 corporate entities are involved in the legal fight, okay? By January 6th, 914 cases were filed, almost all of them since November. And then what was the numbers? 310,000. Yeah, one gentleman paying $800,000 here. Let me just find the 310. No, that's not popping up. Yeah, 310,000. I'll find it. So that one is out there looming as well. And we're going to get that news any day. So potential volatility around the corner. And there'll be other tariffs they can employ. That was what, here it is, 301,000. Yeah, 301,000 importers across 34 million shipments of goods. Okay, I'll post this one in the Tiger's Den, folks. Get in there. I'll post it in terms of, you can see apparels and textiles, the biggest one out there. Businesses suing are nearly all U.S.-based, okay? But around a quarter of them had foreign-based parent companies. A quarter of them. Still, you're talking 75% U.S.-based, even parent companies. All right, we got the S&P's negative by 3, folks. 69.59. Dow in the green, up 255. Russell leading the way, up by 1 percentage point. We're going to take a quick break. We're coming back with Tim Ward. We'll talk some markets. We'll talk some metals. Always a good conversation. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps clawing back into positive territory, up by 1 point right now. Dow up by 273, and the Russell up by 1.1%. To talk about some of the market action, as we do each and every Tuesday and Thursday at 3:30, folks, we're going to jump over to our man Tim Ord. You can reach him at his website every trading day, ord-oracle.com. And don't forget, right under the services tab at TFNN, Tim's got a couple great webinars: The Secret Science of Market Tops, how to identify market tops, as well as 6 secret ratios every trader should know. And we talk about some of those. The SPY VIX in there, TLT VIX in there, as well as some others. You can check those out. You buy them, folks. They're on your members page forever. Watch them as many times as you like, whenever you like. Tim Ord, good afternoon.
Good afternoon. So, actually, things are looking okay. First chart we're going to look at, this is the, actually, it's a 3-day average of the SPX VIX ratio, and this is a monthly chart. So, yeah, the monthlies rule the weeklies rule the dailies all the way down. So if the monthlies start to go a little bit haywire, then you kind of flip down to weeklies, and you try to get close to the tops as you can. And this is a moving average, so there's actually a little bit of divergence on the SPX VIX ratio on just a 1 day. Anyhow, the 3-day slows things down a little bit, and so far we're still making higher highs as the S&Ps are making higher highs. So bigger trends still up. And I notice over the last actually several days, the trend's starting to rise again. Like the 2-day trend, actually the 5-day trend's up to 1.2 right now. The 10-day trend's still below 1.2, but they're both kind of rising here, so I think this rally has further to go. But there's kind of a warning sign starting to be in the market. These divergences, here's the SPX VIX ratio on a, it's a daily, this is a daily time frame. And back at the September high, you were going up. This divergence lasted a month. It's about 4 weeks or 3 weeks going up. The S&P still kind of going up. So we got a divergence right now that's probably about 2 weeks old. Going to continue. It may. I think we're still going to hit new higher highs. So it's a little bit of a leading indicator. The monthlies are bullish. The weeklies are showing actually the dailies are showing a divergence here, but this divergence can last a while. So kind of little warning signs. I'm still long. I think the market still has, maybe anywhere from 2 to 5% to the upside. I don't think we'll get 10%, but February could possibly spill some trouble. We'll have to wait and see. But since the 5-day trend and the 2 and 3 day trend all lean bullish, so we got a little fear in the market, so that's a little bit of fear. You got energy, so on a short-term basis I'm still bullish here, but I'm kind of watching what the VIX is doing. This is the daily. A couple of days, actually yesterday we had 1.45, and last time I checked the trend here about an hour ago, I think we're 1.12. So it looks okay. So as we're rallying here, the trends are kind of high. And so long as that is persistent, we should go higher. When you get the 10-day trend up around 1.9 or down around 1.9, it's time to worry, and we're not there even near yet. So I think this month is still be an up month. February, I don't know. We'll see as we cross that. And actually what I want to get to, we had some interest. We talked earlier in the week, and you were talking about the silver market. You mentioned something about the silver market, and
I sure did. They're talking a lot about silver and even today we got more volatility, right? I mean, this is the tiger's den. The memes write themselves almost, but yes, silver for sure. Please.
All right, this is a silver gold ratio. So anyhow, I put the bottom. So what I do, I measure the velocity of the advancing silver gold ratio and measure the velocity of the down. Depends how fast they go. The faster they go, the more times you're going to run into a reversal. So it's all about acceleration on these indicators. So if they're just kind of moving up slowly, usually that's not a sign. When they move up real fast or down real fast, normally you're close to a reversal. So this one is the rate of change, ROC 12, which is basically the kind of standard ROC number they use of the silver-gold ratio. And one below that is percent B. In other words, it's either it gets above the upper Bollinger Band, which is anything above +1, and anything below the lower Bollinger Band, 0. So I've been marked over the last, this goes back to 1982, looks like. And all the times when those two kind of acceleration indicators have reached peaks of that ratio. So it measures the acceleration of this silver-gold ratio, either up or down, which what direction you go in. And we're kind of getting high here. And these are all the times, it's risk squares. This is monthly XAU in the top window there. So I always start off with the monthly and work backwards. And it works pretty well. Anyhow, all the boxes there are times when the ROC and the percent B, which is basically hitting this upper Bollinger Band. And we're actually in that area right now. So, okay, so don't panic. And also, there's another thing here, too. This silver-gold ratio, and I marked in blue here, kind of the danger zone going back to the 1980s, anywhere from 0.018 to, 0.021 looks like. And so I marked it blue right here. And we're actually hitting that right now. So we're hitting it right now, and the acceleration of this ratio really blew through the tops to the upside. So on a monthly time frame, this silver-gold ratio, in other words, silver compared to gold, silver way outperformed gold. And it got to a point where it's really stretched. And how far can it get stretched? Yeah, it can get stretched more, but it's into the warning area. Okay, so what's that mean? So we'll keep going here. Let's go back to this one. So it's stretched in there. So how far can it be stretched? I'm just saying, this is a monthly chart. Can this thing be stretched for the next couple of months? Yeah, it can. So now you got the monthly in kind of a warning zone. It's not at top. Hasn't said anything about a top, because this ratio could actually move up all the way up to 0.03 for all I know. Whoops, I hear the music.
Okay, we'll talk about, those are some charts, man. I love how they line up, and you always line them up historically in terms of where they match up when the indicators are kind of where they are right now, and that's a chart, man. And boy, quite a year Silver said. Last year and starting off this year. Folks, we're coming back with Tim Ward. We're talking more silver. We're talking more metals. Stay tuned. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. You got silver right now. Tuesday, you were at $82. Earlier today, we were at a 73 handle. We're trading at 76.54, off 1.4%. We're talking with our man Tim Moore. Don't forget, folks, he's got a couple of great webinars at TFNN and also his website ord-oracle.com for his newsletter. All right, Tim, keep going, please. Silver.
All right, silver must. Anyhow, what's this chart mean? It means silver is way outperformed gold to an extent where silver is probably going to hit a consolidation just like it has in the past. But this is a monthly chart. This consolidation doesn't have to show up today, but I bet it does show up in the next 2 months. That's how I'm saying it. So that's silver could go to 100. But this is a warning sign that we're into the blue area here, and these two indicators are extended. So when that happens, it's gone up too fast, too quick, but it still can go up more. So it's not like time to get out of silver, not at all. Now there's a consolidation coming. It's not like 6 months away now. You're probably talking a month or 2 months. That's how I'm viewing it. And we'll get down to nitty gritty as we get closer. So, but right now, I'm in actually silver stocks. I don't see a problem yet, but it could turn into a problem. Here's another one. I'm looking at silver or silver miners compared to silver. So you're measuring the stocks against the metals, and there's cheap. In other words, when this ratio gets below 1.25, or actually 1.25, that means silver stocks are cheap compared to the price of silver. So, and I marked, I took as far back as I could. This goes back to 2011. But anytime it got below 1.25, which is right here, and that's the reason why I marked it here, and we did again in this, that was the top. Then again here, 2023 to actually 2025, or about 2 years, it stayed in the buy area. And that's that point here. And actually, we were, this is silver miners right here, and it's still rocketing up, and this ratio went back down. So the rally in silver stocks are not keeping pace with the price of the metal. So historically, this is a good buy in regards to silver stocks, even though silver may be hitting high. Silver stocks may keep going. I don't know. But in the past, anything below 1.25, which we're actually right there right now, has been a good buy. So what that says to me, even silver may take a consolidation. These silver stocks actually could still move higher because this ratio is so cheap. That makes sense.
I was just pulling up on my chart, Tim, as you make great points, man. And, sometimes, right, and it seems like even more recently, we've had huge accelerations on silver, and then the equities don't react in a way where you have silver up $15 or $10 in a few days. But even I just cherry-picked a day like December 10th, right? And I'm looking, and silver was at around $60 then. It's at 76 right now. That's almost 25% since even December 10th. And I just cherry-picked a day, and then I'm like, all right, what's Pan American at or something like that, right? Well, Pan American's only up 10%. Pan American 7, like First Majestic, only up like 10%. So it makes sense in terms of where they are, the run it's had, as in anyway, thought I'd add to it. But yeah, even some of the biggest equities out there for sure.
Yeah. So when things get and they will at some time, this ratio will get up to here, and that'll be a warning sign, because previous times it happened was up in this area and this area and this area here. We got a long ways to go. So these silver stocks, relatively cheap compared to silver, are still a good buy. Trouble is, we got silver probably hitting some sort of a consolidation phase, maybe, like I said, because of the previous chart, in the next couple of months. I don't think this rally could go on to June. It needs a rest somewhere. So, let's look at the bigger picture. I keep showing this chart. If you want to invest for the long term, I think gold stocks for the next 10 years, because we have a potential 12-year cycle that's gone on in the past. And we started this 12-year cycle in 2024. You had 12 years to that. You come out with 2036, even though we'll have consolidations in the past. If you notice, I did an RSI on here, and current RSI as of today, it's up around 71. Previous times we had 70 or times like there. So we're due for consolidation here, and probably, not too far away. It'll be more of a sideways move. Normally when these bull markets begin, they don't let you in cheap. What will happen is probably a lot of these will do a cup, and they'll do a handle, like William O'Neill's cup and handle thing. I don't know if I probably should put that method up, but a lot of times they don't pull back, they go sideways, and I think that's what's going to happen to most silver stocks. They're going to go way up, and they're not going to pull back much. I bet 38.2% retracement is best you're going to get. You're not going to get a 60% retracement on these issues. They're just not going to let you in cheap. But there's another sign with the RSI of the XAU to NDX ratio up to a level where you can expect consolidation. So I still think a consolidation is going to start somewhere in February, March. I don't think it's going to be this month. So, but anyhow, this is XAU to NDX. So this is measuring gold stocks against the NASDAQ stocks. So let's take a look at the gold stocks against the S&Ps. So you got a totally a different picture here. This chart goes back to 1982, back there, and we're up against a line. This is the ratio. This is the XAU gold ratio. I probably should have put that in there, but this is the XAU to SPX monthly ratio. So it's measuring gold stocks against the S&P stocks or equity stocks. And trend line analysis works pretty well. Went back down, came back up, found resistance there, rallied up, hit that resistance, kind of stayed there for a while. And now we're basically running into the 2002 lows right here, and we hit it in 2016, again 2020, and we're banging against it right now. So does that mean resistance? Well, the more times you bang against a top, the more what's going to happen, I think. This is the third time up. A lot of times it's not third time. A lot of times it'd be the fourth time. But at some point, I think we're going to go right back up to this high back here. So I think these gold stocks are really going to outperform the S&P stocks in the years to come. So this is really the place to be, probably the only place to be, in my opinion. And I'll change my mind, too, on this if things turn to crap. And so far, they're not. All the longer-term charts are really showing that we're still in the early stages of a major move up. And I keep bringing this chart back here. This move up with the XAU to NDX, I call it initiation of a major uptrend. When you get the RSI hasn't been up to this level since going back to 2006. That's 20 years ago. And finally we hit that. They call that initiation of an uptrend. And so this is still in the early stages of a major bull market in these gold issues. And these gold issues are going to outperform the equity markets and the S&Ps and the NASDAQ. So something really
pretty cool, man. I appreciate you laying that all out. I agree with a lot of what you're saying. I was going to add, we're wrapping up gold. Just so much volume in this recent run up too. October, man, you had massive volume. Silver, even more so. Tim, thanks so much, man. Look forward to talking to you next Tuesday.
All right. Thanks a lot. Talk to you
Take care. Folks, check it out. Ord-oracle.com. He's got great webinars on that services tab. We'll come right back.
Narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Always a great segment with Tim. As I mentioned, a couple great webinars under the services tab, 6 secret ratios, and then market tops. You buy those webinars, folks. You can watch them as many times as you like. They're right on your members page, accessible, and his website, of course, ord-oracle.com. But as I was mentioning at the end there, this run up to gold. Now, you can say that we got above this area on lighter volume, but if this is the area of support between 4,000 and 4,200, and that's what it looks like. You look at the volume, look at that escalation to higher prices, man. You ramped it up the entire time on a weekly basis. Look at the run up. Every single week you were doing more volume up towards the highs. It's like, man, this is a remarkable strength. And then you got to pull back and you did it again, right? But you didn't have the volume on this acceleration. Silver, though, silver almost did. Okay, there's your run up on the October volume. Same thing. Look at this consecutive volume. Increases every single week as you traveled from silver from $38. Remarkably, yeah, folks, silver was at half the price it was at August 11th. $38. And every week you ramped it up to a high of $53 in silver. Now, there's the difference, though. Okay? You're in silver. And I think metals have the wind at their back, man. I think rates are going to be under focus. We're sitting at about 4.18% right now. But rates are going to be under pressure in 2026. Okay? If it doesn't happen under Powell, you get a new Fed chair in May. They have 5 meetings throughout the year. That's going to be tough on rates. That's going to be a headwind for the 2-year especially. We'll see how it reacts with the 10-year. That's going to be a headwind for the strength of the dollar if rates are facing downward pressure, and that will help metals. And look at the acceleration. Okay, but man, that was the ramp up in October. You were only at $50. Now, you had better volume on this run up, but you didn't match that run up. But man, silver, quite the volatile session. Then you look at platinum, right? Look at some of the volume on the accelerations in platinum. This move is real, okay? Look at gold. Look at that run up on a weekly basis in gold. Gold, 44.84. We got the S&Ps in the positive. Dow up 278. Folks, thanks so much for tuning in. Have a great night. Have a safe night. We'll see you tomorrow morning, 9 o'clock from the morning market kickoff. Have a great one, folks. Thanks so much.